discuss a few trades that I took, 2 on SPY, 1 on Qs. We're going to be talking about how to work markets that are seemingly strong, but they're kind of in a real tight range, especially in between tight moving averages along with the previous close. There's actually quite a bit to talk about. So let's get right into the charts and let's make her happen, guys. One sec. Okay, so we have SPY and Qs, and what I want to point your attention to here is this daily chart. Now, on this daily chart, if you notice where we opened on SPY and we opened on Qs, it is below all moving average resistance. That's number one. That is super crucial. So when we do that, we want to look for that first short. If we are below resistance or below support, right? Any way you want to look at it, you want to short that support. If you're above support, you want to go long into that support. It's real simple stuff. So the very first trade we took, and remember, today is when I was working with my live trading members, the Momentum members. It's a small focus group of dedicated members that I work with a couple times a week, and we day trade live. And basically, I help them and guide them and follow them into, or they follow me into trades that they wouldn't normally take. It's very education focused. It's to really get people over those emotional hurdles and put them in situations that maybe they wouldn't necessarily put themselves in. It's called momentum for a reason, right? It's to really progress people's day trading. And what we did with this first trade, and you're going to see this trade, I'm going to zoom in on the entries, hang tight, so then you guys can see them a little bit better. So it's a very quick trade. What we're doing in this situation is working what I call trend formation. It's essentially a way to capture a short that doesn't come into resistance, like it doesn't come up and squeeze up into a resistance level. It sells off, but you still know because of the technicals that you want to go short. It is capturing the beginning, the very beginning, that epicenter of that trend. And that's what we did. So it pops up into this area. That's where we start in. That is my first add in or starter position. And then we add into the previous close. And then as soon as it starts pulling back, we pay ourselves right into target, which was right here. Now, it's just a small trade, okay? But it's done with extremely small size, only 2 contracts. And we paid ourselves and made $21. Now, for a lot of you maybe watching this, you might not understand because it's only $21. But this is the process. So we always take a first feeler trade with very small size, and then I increase the size during the day. And then I bump it up to a 10 contract position and then possibly more. And it's a way, the secondary trade that I took here on SPY was a 10 contract position, locking in $143. And then I took a 25 contract position and added in with 25 contract blocks. It gives a various range of sizing for the members watching live and taking these trades. So then it can scale them up and they can see how it's done with small size, medium size, and a little larger size. 100 contract position all in on that isn't a very large position for me, but you get the idea of how it scales. So that was the first trade. So locking in $21 off of only 2 contracts and a very quick trade back down to what I call natural. Okay. And then secondary trade here was on SPY long. Now, what we wanted was because of a rounding effect. Now, remember, it's over top of that 9 EMA, which is right here. So we opened up and we got above that, all of that moving average resistance. Okay. So not only above the 9 EMA, but above the previous day's highs. If you look at the daily chart, it's clear blue skies above that. So there is a really good chance that this thing can squeeze up. Now, it didn't do that, but that's okay. What we have here is we waited right for the 9 EMA test, which I said. So it pops up, comes above the 9 EMA, then we want it to pull back and remount that 9 EMA. That's what it did, would have added into the previous close, okay? Didn't need to do that, so we only got a starter position on that, 1 contract. So this was a 10, or 1 position, a 10 contract position. So 10 contracts in, as soon as it comes back up, start paying ourselves, and then stop out on the rest. It's a very tight stop on this. Okay. We're not going to give it down into the previous close, right? That's fine. So locking in $143. So again, first trade I took, we made $21 off of 2 contracts. Second trade that we took off of 10 contracts, it's a very small position, 10 contracts, making $143. So you're locking in just off of that, trading very small size. How many of you out there would want to make $150+ a day extra? I know it doesn't sound like much, but it adds up over time. You're talking tens of thousands of dollars a year extra off a very small, manageable size. So now let's go into the last trade. So Qs here, and I gotta fix this. So on Qs, this one was really interesting. One sec, let me get zoomed in here. So Qs was pretty interesting right into this area. So we've tested multiple times, and it could not get above the previous day's highs, and right into that 5 EMA previous close, previous day's high area. It was really struggling with that. So took the opportunity on that, and there's a little more going on that, but that's okay. And ended up taking that trade, averaged into that position. Like I said, 25 contract blocks. You keep that average nice and tight. Paid myself on that as soon as it comes up. And there were other multiple areas where we could have taken it into the 5. But at that point, the day's done, morning's done. Not going to continue to trade. I'm not one of those people where you're ever going to see 5, 10, 15 positions taken. That is nonsense. That's a gambler. That's someone that's never content. And locked in on this very quick trade. Remember, this trade only happened within 10 minutes, locking in $855. So essentially making $1,000 a day off of extremely small size. And this is how you manage these positions. And now to talk a little bit about what to do. So if you really take a look at SPY's daily chart, let's go over to this. You can see this daily chart a little bit better. So right at the previous close was that 5 EMA at the open. Okay. Now remember, those moving averages are going to move around a little bit as the day progresses. So it's a little difficult after the fact to show you guys. And then that 9 EMA was right here. It gets locked into a really tight range, and it'll ricochet and bounce in there. Now, sometimes it's difficult to see again after the fact because it goes through the level and everything else. When you get range bound in these tight little ranges, it's easy to just sit back and wait for the proper trade, okay? And that's essentially what I did on that last trade. It was the last trade. It's proved itself that it wants to be weak, and you execute that trade. And I could have, and normally I would continue to work that position short on Qs, and it would have been a very monstrous day. It doesn't matter though. It's okay. 3 trades is like the max that I'll take during the day. No matter how much money I make, I can make $10 or I can make $20,000 plus, and it doesn't matter. It's 3 is an absolute maximum. Any more than that, you're just playing with fire. But remember, in order for this right here, for SPY or Qs to squeeze up and continue up, it has to open over those moving averages. Yes, you can look back on the daily chart, and there will be times where it'll continue up. That's fine. It can do that. But in order for it truly to be strong and have very little hurdles or roadblocks in the way for the day, it needs to gap up over those moving averages. It's so important, guys. And this is where a lot of people are putting themselves into positions where they shouldn't necessarily be in. And that's why they're always in the wrong side, is because they don't quite understand the mechanics of the market and what true price action is. A lot of people think watching price action, you got to watch the tape or the level 2 or all that nonsense. You don't have to do that. Everything can be done based off of natural movement theory, which is proprietary to Tricktrades and my strategy. And this is what I teach in Tricktrades. And this is why my members are so successful, and they have the greatest odds of success and actually being a consistent day trader. So if you want to be one of those consistently profitable, professional, career-oriented day traders, come to tricktrades.com and trust one more time, and we will set you up. There's nothing that we don't have when it comes to education. You are fully set up, whether you are an absolutely bare bones beginner trader or more of a novice or intermediate, what you consider a novice or intermediate. And when you come in, you're going to get schooled and you're going to realize you're not as far ahead as you think you are. But that's a good thing. It's about ownership and really understanding what the truth is, not lying to yourself. If you lie to yourself as a day trader, you are fucking going to fail. So it's about being honest and upfront with yourself and your coach, and nothing can stop you. So on that note, folks, I hope you have a wonderful evening, and we will see you tomorrow. Adios.